All right, today we're going to peel back the layers on how the market really works. This isn't about using a crystal ball or anything like that. Think of it more like forensics. We're going to learn how to read the clues, the actual footprints that the biggest players leave behind so you can start to see the market the way they do.
You know that feeling, right? You see a huge price move, you finally decide to jump in, and bam, it instantly reverses on you. It's so frustrating. It feels completely random, like you're always just a half second too late. But what if I told you those moves aren't random at all?
Here's the secret. Giant institutions, we're talking big banks, hedge funds, they can't hide their moves. They leave these massive footprints all over the charts. Our job isn't to be smarter than them. No way. It's just to get really good at spotting where they place their bets and, just hitch a ride.
Okay, let's get into the heart of it. The market really only ever does two things. It's either in a state of balance or imbalance. Just picture a calm, sleepy lake versus a powerful, raging river. Understanding the difference between these two is everything when it comes to spotting where the big money is about to make a move.
So at its most basic level, the market is just a tug of war. That's it. When the sellers are yanking harder than the buyers, you get a supply zone, and the price gets pulled down. When the buyers are winning the tug of war, you get a demand zone, and the price gets yanked up. This is the engine that drives every single price tick you see.
So when both sides are pulling with about the same strength, the market's in balance. The price action is kind of boring, it's choppy, it's slow, it's not really going anywhere. But when one side suddenly gives a massive heave, you get imbalance, an explosive, one-sided move. And it's in those moments of imbalance that these powerful supply and demand zones are born.
And this, right here, this is the key. Those huge long candles that just rip across your screen, they are not noise. They are the footprints. They're a giant neon sign that an institution just dropped a massive order. The bigger and faster that move, the more conviction and money is behind it. And that's what makes a zone worth paying attention to.
Okay, so we get the theory, but how do we actually find these things on a chart and draw them correctly? Let's switch from theory to practice with a super simple 3-step process you can use every single time. This is the foundation for everything else.
It really is this simple. Number 1, find the explosion. Number 2, find the little candle that came right before it. We call that the base. And number 3, draw your box. That's the whole process. And let's break each of those down so you can do it perfectly.
So, step 1 is all about training your eyes. You need to scan your chart and ignore all the normal, boring price action. You're hunting for the giants, the huge, long candles that just stick out like a sore thumb. That's your signal. That's the flare going up that says a big institution just showed up.
All right, you found that big explosive move. Now, just look immediately to the left of it. You're looking for that last little moment of calm before the storm. Usually one small candle, or maybe a few tight ones. This little spot is the origin, the launching pad. It's the exact price where all those big orders were being quietly stacked up.
And finally, the easy part. Just grab your rectangle tool and draw a box around that base candle. But listen, you have to be precise here. The box has to cover from the very tip of the highest wick down to the very tip of the lowest wick. You need to capture that entire range because that's where the whole battle took place before one side won.
So now you know how to find and draw zones. But here's the thing that separates the pros from everyone else. Not all zones are created equal. A professional trader doesn't just shoot at every zone they see. They wait. They wait patiently for those perfect A-plus opportunities.
And you can just see the difference here, can't you? It's night and day. On the left, the high-quality zone, price just rockets away from it. It doesn't look back. Now look at the right. Price kind of slowly oozes away with these weak, choppy candles. The difference is momentum. Speed equals strength. So once you find one of those A-plus zones, your trading plan is simple. It's mechanical. You don't chase the price. You patiently wait for it to come back to your zone. That's your entry. You put your stop loss just a little bit outside the zone in case you're wrong, and you aim for the next major zone in the other direction.
Now, we get to maybe the single most important number in all of trading. Before you ever click the buy or sell button, you have to ask yourself if your trade meets this one simple benchmark. This ratio is what turns trading from a gamble into a real business.
Look, let's be real. You are going to have losing trades. It's just part of the game. But trading isn't about being right all the time. It's about math. If you only take trades where you stand to make at least 3 times what you're risking, you can literally be wrong most of the time and still make money. That's the professional edge.
Okay, let's level up a bit. You found a great-looking zone and price is finally coming back to it. Now what? You have to be able to read the battlefield in real time. There are 3 key things you can watch that will tell you if that zone is likely to work or if it's about to break.
This is kind of like your final pre-trade checklist. First, what's the bigger picture? What's the overall trend? Second, how deep does price push into your zone? And third, how long does it hang out there? Let's quickly go through each one.
Rule number 1, and honestly, if you forget everything else, remember this. Trade with the trend. Don't try to swim against the current. If the whole market is moving up, you should only be looking for demand zones to buy from. If it's heading down, you're only looking for supply zones to sell from. It's that simple. Now, as price comes into your zone, watch it closely. A really strong zone is like a hot trampoline. Price touches it and bounces away hard and fast. That's what you want to see. A weak zone is more like quicksand. Price sinks into it, struggles, and grinds deeper and deeper. That's a huge warning sign that it's probably going to fail.
And last, look at your watch. A powerful zone doesn't like to hang out and chat. The reaction should be fast, like within a couple of candles. If price gets into your zone and then just starts going sideways for a long time, it's telling you all those big orders are gone and the zone is probably about to break.
And really, this quote just says it all, doesn't it? The goal isn't to take a bunch of shots and hope one hits. It's about taking the one right shot.
You have to realize that the real work of a trader isn't all the frantic clicking. The real work is the waiting. It's the discipline to sit on your hands and wait for all the pieces to line up perfectly. It's always, always quality over quantity. So, you've got the blueprint now. You know what to look for, you know how to draw the zones, and you know what separates a great setup from a bad one. So the only question left is, are you ready to go pull up a chart and start looking for those footprints?